Welcome back to What Would It Cost? This week we're talking all things real estate and more specifically resale.
Today we're talking to the CEO and the big chief over at the Jake Smith team. Jake
Thank
Smith.
you, sir. Yeah. How are you guys?
You bought a shed in Windsor?
You made money in the housing market last year? No way.
Anything you shot on you would have made on.
What would it cost?
That's the $1 million question. You're looking at North Bay now is at $1 million. I don't even think they hand you the keys anymore. What is it going to cost?
How much? Hi, my name's Nicholas Regina.
My name's Michael Sakuro.
And you're listening to
What Would It Cost?
Is that good? Yes.
Thanks for having me.
Well, thank you for coming out.
Yeah, thank you.
Yeah,
thank
we're
you.
super excited to have you on the show. And again, thank you for giving us, this time out of your day. We know you're a busy dude.
Anytime. Yeah.
So we want to talk about, your resale, mostly your listings in these outer regions that is not common amongst a lot of realtors or a lot of clients of what they're looking for. So I know you have a couple farm properties you're selling,
Yep.
commercial properties with businesses, and even a residential home on it. So it's
Yep.
really cool to see all your different kind of listings because they're the ones that are out there. It's not just your standard detached or semi-detached home and that's it.
Exactly right.
Yeah,
So
yeah.
well, pretty much right now we do have one on the market. It's in Springwater, so it's 5 acres. It's a residential commercial. So how that works is the building's actually more of a duplex style building. So if you're looking to have staff on board and you want to have the back end storage area, which it also offers outdoor storage as well, that's available for $6 million.
Awesome.
And
Nice.
that's what it will cost.
Yeah.
So, yeah.
Right to it.
Yeah, exactly. Yeah.
Sign
Not playing
here.
around. Yeah, I'll go by the name. Yeah. So,
it's awesome.
1.5 for the down.
exactly. Yeah.
And even breaking down that $6 million, because I know there's a business attached to it. So
Of course.
So that was interesting to me to find out because I thought you're just realtor, you're selling real estate. So how's the business fall into that, and how are you, I guess, evaluating it, or is it something that the client's telling you, okay, this is what we do in their business, this is what we're evaluating it at, and you blend it with the land?
Yep. So what happens is it also blends in with the land, and also what we're doing is we're selling their equipment as a package.
Okay.
So with the equipment, they give us an equipment list, pretty much broke down what the expenses are for each unit on the equipment, and then that's where we added in the land value, and that's where we kind of made a decision on the price where we want to go at and stuff too. So
Nice.
Yeah.
Talk to us a little bit. So when you're assessing the equipment value, right?
Yep.
What would it cost in relation to what would it cost? Do you assess like how old that equipment is, what it retailed for when it was new, what the market's paying for it? Like how do you go about, adding that in and injecting it into the overall sale price? And then is it something that can be built in and then mortgage? Talk to us about that.
Yes.
Right?
So that's another thing too with big properties like that. Sometimes you do something called a vendor take back, which is basically where the seller acts as the bank. And when they sell it back to, say, the buyer, they can give them, $1 million off the price, but they can pay that back over a year or two, depending on that. But when it comes to actually selling the equipment, sometimes you got to rely on the actual seller. You can't be an expert in every industry, right? So,
Absolutely.
they can say, we bought this for X amount 10 years ago, and then you kind of got to factor in the wear and tear and all that, and just
depreciation
go.
of it.
Exactly. Yeah.
Gotcha.
Yeah. So,
and I'm happy you brought up the vendor takebacks because that's we see a lot of that, especially on the types of properties you're selling. You have large acreage or farms, and like you said, it's not your run of the mill mortgage they could get. So what's that look like on a vendor takeback? What are the terms? What's the longest you've seen? What's the shortest?
Yeah, it's usually the longest I've seen that people want their money back fairly fast.
Yeah.
I'd say within a year or two. The longest you'll see is usually 2 years, and then the shortest you'll see is probably a year. And it's usually about $1 million to $2 million. Based off that, and then that's when we talk to guys like you and try to get the interest rate and line that up with the seller and the buyer, so it makes sense and they can go from there. Like you said too, it's quite common and popular with vacant land, especially because it's hard to get a mortgage on a vacant land.
Yeah.
So
most times it's 20-50%
right?
down, especially like you don't know what you're doing with that property if you want to service it or whatever it may be. Sometimes, like you said, it's better to get that vendor take back, do what you have to do to that property, maybe service it so you're getting that higher mortgage with the bank or that higher value for sure.
That's exactly it, right?
Yeah.
So
And then
yeah, boys.
and then now, since we're talking about these niche properties, so run us through some other properties or some what you're more niche into on the resale on the real estate side?
Yeah, well, with resale too, it's kind of, I guess in this industry, you kind of just fall into stuff just based off clients you have.
Yeah.
Right.
So we've been dealing recently with a lot of farms up north, especially Southgate area.
Yeah.
So if you land one or two out in that area, it's a very tight-knit community. A lot of the farmers know each other.
Right.
So, especially in Southgate, we've actually been working with like some of the Amish community.
Oh, nice.
So yeah.
Nice.
So
That's awesome.
it works out there. And then, so you get like big farms are about 100 acres. And then
Right.
just based on that, we have one that's coming up. It's going to be 3.3. It's 100 acres. It's a new style farm as well, and it's got like a little barn on it and everything as well too. So
nice.
Yeah. So
what does that look like from when you're dealing with the agricultural side of things? Are you looking at it from an acreage perspective, and what the zoning is, and how close it is to the nearest development in an urban city? Like, just tell us a little bit about that and how that gets assessed and looked at, right?
Yeah. So usually how it works too, like if say it's a 100-acre farm, there's only going to be X amount that's actually workable.
Right.
So you got to go based off the workable land. So say on the 100-acre that we have listing, about 60 of it is actually workable, and then the 40 it's treed, certain areas that you can't really use.
With the green belt.
Exactly.
Right.
Yeah.
Okay.
So green belt, there's different restrictions. The Niagara Escarpment, there's certain things that you can't technically farm off of.
Right.
So in that sense, you can't, it's almost useless, but you still got to give it a factor because of the acreage, right? So
Right.
you're still purchasing the land. And then also with farm, there's something called tiling. So it makes the drainage for whatever you're farming, I guess, easier to do. So there's certain things like that actually add extra land value depending on how you take care of the land as well too. So
Right.
Yeah.
So you're taking land and you're selling the land from a farmer, and what was being the purpose of that land being a farm, and you're selling it to another farmer. You're not selling it to a developer.
It depends on the case. So right now, I haven't personally done that with another developer, but usually it's a long process. You got to go to the city.
Right.
You got to see what the zoning restrictions are,
Right.
if it's even allowed. Because a lot of the times the developers, it takes a lot. You got to fight with the city. Depending on the city, it's going to be a tougher fight majority of the time. So based on that,
it depends how big the envelope is, and you get grease in the
that's
wheels.
exactly It's like, take that, buddy boy. So
What are you zoned for?
Exactly. So.
Want to build a skyscraper?
Yeah, exactly. So it depends city to city. Depends on what's going on in the area too. Like if you're starting to get a bunch of residential homes building towards the farms, that's usually when it says, okay, maybe we should approach the city. Or a lot of developers, what they do is they'll buy the land, they'll bank it for a few years, go through the process of getting it, potentially zoned residential, switched over from the A1, and then go it based off that. And then that's when they make their money, right?
So, and given that, because you're saying they're banking it, so a lot of these guys are not buying it to farm themselves. So
exactly.
For example, you want to buy a residential house, you're like, okay, what's my market rent I could get on this? So what do you equate to that? Like, is there like a market rent analysis in the sense of, I'm going to rent this out to a farmer, or is there one's more desirable? Here's corn or a cow pasture or whatever it may be.
Yeah, so exactly. So it kind of depends on the area. I found with the Amish community, what they actually like is they like somebody renting the actual house. So they don't live in the house, and they just buy the land, own the land, and then they farm the land. Okay. And then they make money off of just the income from the rental income.
Oh, smart.
So So
very cool.
Depending on who wants it for what, right? So
And then they become very self-sufficient in regards to being able to grow their own produce and have it be that the family works the farm with them and is able to bring in an income through that and expand the business essentially.
That's exactly it, right?
Very cool. Very cool. Yeah. And tell us a little bit about the Jake Smith team and how you've scaled that and the new talent that you're bringing on and what you look to do in the future with it and what you're currently doing and how both being on the management side of scaling a real estate team along with being on the transaction side and still having your own clientele is. Tell us a little bit about, managing and dealing with both, because I know you got a lot on the go.
For sure right now. So it's still first in the baby steps right now. We got a team of 3 right now. It's myself, Renee, Michaela, and Jaylyn. All 3 of them are absolute rock stars. So they're going to do very well in this industry. Just right now, it's just kind of coaching them a little bit. All of them are good at their own I guess they specialize in their own areas, especially too. So we got like Renee in Mississauga, we got Michaela downtown Toronto, who's doing absolutely great down there, and we got Jalen and Vaughn as well.
Awesome.
So so we're spread out. It's good for, I guess, potential clients because we can send anybody who's in that specific area to handle it.
Definitely diversified. So at least someone comes to you, it's like, no, I just deal with this area. You have an expert
in each area. Exactly, right?
It's a very well diversified real estate team that understands the different micro niches in the market and is able to perform at a high level for whatever type of clientele may walk through your door, right? And the team seems, when we met with them to go over all the mortgage fundamentals and give them that information, because that's something that we've done together, is to keep your team motivated, inspired, and also educated with what the mortgage process looks like, just add that layer of expertise. But they seem to be pumped up and motivated and really excited. So good on you for being able to inject that company culture and have that, be noticed.
Well, I appreciate that, man. I'm excited. We're growing every day too. Still new to me to be on the managing side of real estate too, because you're on your own in this business at the end of the day, right? So you can only teach people so much, and then they got to take it over, and all three of the girls, they're going to do really well. So
that's awesome.
Got a rock solid team.
Solid. And now looking at the market outlook, the last 2 years obviously it's been crushing. So more specifically on the properties you're dealing with, again, like these commercial properties, farms, vacant land, how's that looking? Is it having that same increase just like the your residential market, or are you seeing it picking up a lot quicker, slowing down?
It depends on the pocket too. So if you're like downtown Toronto, it's almost guaranteed to be hot just because there's so many buyers looking in that area. But the major issue right now is supply and demand. So
absolutely,
there's always one house and then there's 20 buyers on it. So until that somewhat balances, which people have been saying it for the past 4 or 5 years, it's going to balance, and it hasn't yet. So, one house pops up, you got guys fighting over it, it's going to always drive the price up. So it's hard to predict. I just, if it ever does catch up, that's when it will probably calm down a bit. But like I said, it's almost impossible
you make
to
a good
predict.
point of supply and demand. We're in that unprecedented time where immigration stopped for 2 years, and we know immigration is a huge factor to all our markets in Canada, being a huge immigration country. So it's definitely it's hard to put your finger on exactly what's going to be going on.
It's interesting to know that, even talking about agricultural land out in the suburban areas, or an hour's out from the downtown core, is still feeling that direct effect from the supply and demand issue, and how we're just becoming more and more dense as a province altogether. Right?
That's exactly it.
Very interesting.
The population's growing. You got to keep going outwards, right?
Exactly. So, there's only so much you can squeeze down.
Exactly. So even like a lot of the farms, there's like Puss Lynch area, Guelph, like around there, the Wellington area.
Right.
All those farmers, they're more moving towards Southgate now because the development's caught up.
Right.
So everybody wants to be closer to the downtown core, and all the farms that they've been around forever. Those are the next spots to be built on. So that's going north, like west, wherever. So wherever you can fit them, right? So
and to touch on that, because I remember a couple of years back before this big boom, the popular areas where you're Allison, New Tecumseh, all that. What are you seeing as the next one? Or Innisfil was big as well. What do you see as that next one that's even further north? Because I remember seeing New Tecumseh and Allison at like 500, 600 grand. Innisfil, 300,000-400,000. Now they're all millions, like 1.2 to 1.5. So what's that next for our first time home buyers? Is going to be like, where's that next place?
None of it.
Absolutely.
Like it's going so fast, man. And like right now, I really think Innisfil's on the up and coming. So it's just because Barrie's already fully developed, so you're kind of in that pocket in between Bradford and Innisfil. So even that Springwater, they've got a lot of nice like estate type style homes. So that's right beside Barrie there. So that whole pocket, it's going to fill up, and then the more north you go, it's like Collingwood, Wasaga. A lot of that's already developed, and I find a lot of people, what they're doing now is they're selling their big homes in Toronto, and they can either work from home or they're retiring, because a lot of the baby boomers, just because of the age, they're saying, okay, why are we staying down here? Let's sell our house, cash out, move to Muskoka and buy something and live on the water, stress free. So
call it a life.
Exactly.
Oh, why not?
Sell the house, sell the car, buy a boat. So,
we've been having a lot of conversations with people that are retiring and looking at what their real estate portfolio has done for them on a performance level, and they're saying, "Holy smokes, we got a lot of equity here."
Yeah.
Yep.
You know, and it's nice. It's nice to see that look in their face when they come to the realization, like, we have options.
Yeah.
You know?
Oh, yeah.
And we can do a lot. And then that's where other markets come into conversation, and people get excited. Right?
Oh yeah,
For
yeah.
sure.
Well,
New
throwing
opportunity.
that Florida plug too. So
Yeah,
a lot of
yeah.
people they'll sell their houses,
Yeah.
they'll
Absolutely.
move into condos, and they're buying something out of country, right? So
Right.
Yeah.
that's why that's important, I believe, for everybody to kind of tap into that market too.
Yeah,
So
yeah.
you're not just stuck in one spot, and I think
Yeah.
it's good to be mobile, especially with our harsh winters. It's good to be able to have somewhere else to go to.
Absolutely.
Right.
So
Yeah, especially if you're moving a lot more north, you definitely don't want to be here in the winter.
Exactly right.
We're
So
pretty
yeah.
south, and I hate it.
Yeah. So yeah, it's just finding whatever the unique preference is for per client, and then just
Yeah.
do it based off of what their needs are, right? So,
Yeah,
Nice.
absolutely.
Yeah.
And in light of the podcast theme, what would it cost? So we're
Yep.
looking at, let's take a look at a piece of land, about, let's say 10 acres
'Kay.
outside market. What do the commissions look like on that? Is it the same in regards to, the pre-con or the resale commissions? What are the closing costs, the land transfer tax, and just get into the simple numbers. for
Yeah.
us, right?
Okay. So pretty much what it would cost for vacant land. It's usually 4%. You usually do 2 on the
Okay.
listing side.
Okay.
And then 2 on the cooperating side, right? So
Okay.
that's usually what that costs. And then depending on the area, that's the price of, like there was one in Caledon we sold. It was 25 acres. It was almost a year ago now, but that one went for 5.3. It's just plain land, no
Okay.
house. Absolutely nothing on it, and even that one had a bidding war
Wow.
on it too. So,
Right.
yeah.
So that's about $250,000 an acre.
yes,
Okay.
roughly. Yep,
Okay.
yep. So, yeah.
And what was the zoning on that?
Zoning was A1 zoning, so that's
Okay.
agricultural,
Okay.
and that was just completely by itself. There's
Right.
no structure on it, and
Right.
Yeah.
Right. What
so-
are the land transfer
Uh,
taxes start to look like?
Yeah, it's a few. It's pretty similar, and also you get a deduction with being at farmland as well.
Yeah.
So yeah, you don't
should
get
be
hammered.
like, Nick, you asshole. That's your job.
Exactly. Yeah. Call your lawyer, buddy. Yeah. So, yeah. But
Right on, right
yeah,
on.
yeah. So
Very cool.
Yeah.
And yeah, talking about like, hot markets. So how long do these usually sit? Because again, it's like niche. Like I know there's one we were working on that it's 100 acres. You know
Yeah.
what I mean? It's not like your average Joe's like, yeah, I want that 100 acres.
Yeah.
So I know a house, they're lasting 2-3 days. How long's a piece of vacant land or a farm lasted?
Depending on the area again,
Yeah.
but it depends, because like you were saying too, you're tapping into a different bracket of people that can actually afford that, right? So
Yeah, yeah.
if people can't, it's hard to say. Some
Yeah.
of them will be, sometimes I usually try to take a contract for a year. So
Right,
like,
okay.
yeah. So if you do that, it gives you enough time.
Right.
Sometimes if it's sitting for a couple months, then you might be overpriced,
Mm-hmm.
or you're not looking for the buyers in the right spot. So you got to kind of
Right.
change your strategy at that point.
Right.
So
Right.
yeah.
And are you seeing what are your bidding wars, if there are they even existing in that world? Is there how does that work in comparison to a semi-detached coming up in the GTA and there being 40 offers on it? Like, what does it look like when you put up a big piece of land like that on an outside market?
Yeah, so I find with a big piece of land, what we do is we
Yeah.
actually strategically price it correctly. Like
Okay.
I know right now with everything going on, what they're doing,
Yeah.
we're underpricing it on purpose. I know it
Yeah.
kind of sounds twisted to do that,
Yeah,
but
yeah.
at the end of the day, you work for your client. If that strategy is working, that's what you do.
Yeah.
At the end of the day, that's how it works. So
Yeah.
it's been working. It's not a fun way to do things, but at
Yeah,
the
yeah.
end of the day,
Yeah.
you got to have the best interest.
There's a 199,000 downtown Toronto, 3,000 square foot home sells for $4 million. The realtor's good. He got 3.8 over.
Oh yeah, exactly. List it for a toonie and then
Yeah.
just let the buyers fight for it, right? Yeah. So yeah.
I've yet to see that. I'd love to see someone do like a ballsy move like
Oh, yeah, yeah.
199.
Well,
like
let's try it out,
4,000
pal.
square
Yeah.
foot mansion. It's like no, you know what I mean? Like go.
Yeah, yeah, exactly. Let them duke it out. Yeah,
Yeah.
Throw them in the basement of the house. Whoever
Exactly.
wins gets the offer.
yeah,
I think
It's not even about going firm anymore.
yeah.
Do you find by doing that, lowering the price super low and having that bidding war and, it's sold over asking, do you find that a lot of buyers are getting tired or they're catching on to it where it's going back to, you got a sort of price to sell?
Yeah, so everybody's getting frustrated with it, even the listing agents. The buyer's agents, we got to do a lot more educating our clients before taking them out. Because a lot of the time we have them set up on automatic email, or we're skimming through emails. We send them something for $799. Their budget's $800,000, but the $799 is going to go for 1.1. Exactly. So at the end of the day, it's creating more work for everybody by doing it this way. I don't like the fact that it fell into it, but that's kind of where we are right now. Pulling it back out, it's going to have to take the market to level out. But I do believe it's going to come to an end soon. I do see it slowing down a little bit. Like there was one on the weekend that we showed. It was 3. It still sounds like a lot, but there's 3 multiple offers on it. But like even last year, and some pockets, it's like 25 offers plus, like just depending. So it's just sometimes it's out of hand right now.
And even to go to your point about the buyer's frustration, like I noticed it on our end, because they're saying, or we're doing the pre-approval, you could afford 700, 800. So they're going to see the houses because they're like, well, it says listed for 700, 800. And they're just walking away from it because it goes, like you said, 1-1, 1-2. It's like, it's really, they got to actually look for the 300-400 to get to what they're actually pre-approved.
That's exactly.
But I can imagine it drives us crazy trying to help them. I can imagine it driving them crazy. Just like, I'm getting approved for this, I don't even know what to go look at.
Exactly. Yeah. You've got to break the bad news to them quite a bit, and it's the best way to do it is you print off comparables in the area. You show, okay, I know it's listed at $799. There's almost identical house sold for $1 million. That's where we're at. If you guys still want to go out and see it, let's go do it. But you're probably paying $1 million for it. So
How do you feel about this seller's market and the gas prices touring your buyers?
Everyone's going to be homeless in 2 years.
As if buyers didn't piss you off enough. How do you feel now, Jay?
Oh, yeah. I'm furious,
he's
man.
Going Amish.
I joined the Amish community. Screw everybody.
He's going to ask next time. Instead of commission, he's going to get a horse and buggy.
Exactly.
It's hilarious.
Yeah, no, I can imagine that definitely plays into
going on,
You're driving these guys around. You're like, who's filling up?
Exactly. So
well, listen, it was a pleasure hosting you and always hearing from an expert like yourself on your niche in the market. And although you got a team that is an expert in every different area, if there was more time on the clock, we'd love to talk about all that.
I'll be back.
We're definitely gonna have further episodes and seasons that we'd like to have you on. And again, thank you so much for your time. Really appreciate it. And you're a total dude, and you've been so good to us, and we really appreciate that.
Anytime, man. Thank you guys both for having me, and
thank you again for tuning in. Be sure to check us out on all your favorite streaming platforms. Be sure to like, follow, and share, and we'll see you next week.
What would it cost? Next on What Would It Cost?
Talking about the universities, that's something I've always been interested in, is the student rentals. What's that yield looking like for? Because it's very different than your traditional. Because you might have 3 bedrooms, you rent to a family for $1,500 a month, but with the student housing, you're going per door. So talk a bit about that.
Well, to look at the rents. So because we're getting $800 a bedroom. So some of these houses are bringing in $4,000 a month, or around $4,000 a month.
And what do you get with a bedroom typically?
Closet, bedroom, and you share a bathroom, and you share a kitchen. So but you get the environment. So you get the being downtown in the university district where you can party and you can do all this stuff. So that's what you're paying for is the location.